Okay, good day, everybody. This is Dennis Wilborn, active trend trader. I welcome you to today's session of On the Radar. We're going to do a live market update and a couple of stocks that we're particularly interested in. So let's see, where's that handsome guy? Oh, there he is. Hey, we are in Meridian, Idaho, visiting our youngest son and his wife, Sharon, and our two grandkids that are here. Missing our son, of course, that is over in South Korea, and his lovely wife, Bomi, and our two grandkids over there. So anyway, you're ready to jump into today's session. As you can see above my head, I have a chart of the spider. One of the things that we'll be covering today is we're going to look at the indexes. We're going to look at a couple of trades that we have going on, see if we need to adjust anything on that. And three, a couple of trades that could be setting up for either option trade and or a buying the stock trade. So jumping with no further ado, what's going on with the S&P? This is Wednesday. We've had 3 days this week so far. We had a gap up to start the week on Monday, a sell-off, bearish engulfing on Tuesday, and today we're getting kind of an inside day. You talk about a mixed up week, that's exactly what we have. I take a look. One of the things that's really challenging during holiday sessions and holiday periods is that it's kind of take it with a grain of salt trying to interpret the candlesticks. While, yes, they are still valid, there's a lot of other things going on below the surface, such as decreasing volume. However, some of the other things that we want to be taking a look at, yes, we are still making a new high on lower momentum. Now, part of the lower momentum is caused by, guess what? Lower volume. So that's part and parcel of what we're looking at going into the holiday season. Now, price action on the S&P is staying above all the moving averages. We're still holding the breakout. If we drop below yesterday's low, which is down here at $370.83, that's what I anticipate. We would probably fall the rest of the way. I'm guessing to about 365. That looks like a good target area. Another way, if you're wondering how to take a look at that, you can always pop over and do just a real quick Fibonacci on the intraday charts. And no, we're not going to, because the price action is so tight that it's really not giving us a really good indication. However, I can grab a fib from over here. This is the low from the 21st of December. Jump back up to that high. Where might it go? A good area to be, the 382, the 50, or the 618. That magic fib zone could be a good retracement area on the S&P. Jumping over to the next one, the Qs. The Qs representing the NASDAQ. What's going on with that? What I see here is, let me go back to the daily. We had a spinning top. We had a spinning top yesterday, spinning top today, not topping out today, yesterday's high, not going out yesterday's low. So we're just hanging there. I would anticipate, I could see us basically pulling back to this uptrend line and bouncing from there, or the breakout line down here at the 308. The question that I like to ask, because this can set us up, especially going into tomorrow. You want to tune into tomorrow, because what I may be doing is setting up a couple of option trades on the indexes if the signs that we see with the index, the indications on the indexes, is that it will potentially sell off or at least pull back a little bit more. If it's a $3, $4, $5 pullback, we can work a credit spread into that and take advantage of that move down. What I'm anticipating from here at 312 down to 308.50. So that's about a $4 move. Take out the middle part of that, can set up for a very good option trade to the downside. Let me get rid of some of this other stuff that's here. Remove the drawings. As you can see, we came right up to the 1272, and now we're pulling back from that. We can also, let me go over to the weekly chart to make sure where we grab that from. Okay, where we grabbed that from was, okay, from this move from here to here. And so it's popping up and seeing how far it's going to go. The other thing that we can do here is also just jump in, and let's get rid of that for a second. How far is it likely to move down? So in other words, where could we anticipate a potential trade to get in? Let's assume that we have the high is in. I'm going to go back over here to the daily chart. We took it from there to there. So I'm going to grab that. Well, darn Dennis. There we go. I'm going to grab, we're going to do a Fibonacci retracement. So from this high here to this low. No. Hold on just a second. I want to make sure that I'm giving you the good scoop. So I went from this high here to that low there. I can go ahead and just grab that. We'll expand this, and then we'll go and take a look at it. If we get a similar or a symmetric move down, this is the major move that we had going down to there. Pull this back up to the past high there. Now that gives us a new trajectory to the downside where we anticipate it going. If it falls 100% total symmetrically with that other trade, we're going to drop from where we're at down here to about the 273 level. But as you can see, the 50% is here, the 618 is here, and so that is a really good, strong level of support, about the 294 to 295 level. Would that give us an opportunity to trade something to the downside from here if we're going to cut through all these moving averages? You betcha. I may take it down to 298. I like 298. It coincides with the 50-day moving average and this, the 382 extension. So again, just a rehearsal of what I did. I took this last major move down, which started on the August 31st and ended on the, it was about a month long on September 20th. If this is a major high, we can anticipate a similar move down. You can also take the same type of move from here to here and give another projection down. And as I've spoken before, if anybody is looking for a potential of taking a look at or get some additional training on how to use Fibonacci's, please drop a note in the comments saying, yes, I would like some additional training, and we'll make it a free training for active trend trading members. And so if you would like some additional trading, you can basically register. It's free to register for active trend trading, and you'll get some of this free training that we'll be doing. And also, if you are joining us on YouTube, because I post this same video on YouTube after the live session's over, please subscribe, hit the bell, and in the comments saying, yeah, I would like to have some additional training on how to use Fibonacci's. I use Fibonacci's not only for pricing, but also for time. It's amazing how well it works in both categories. So let me know. So IWM, what I'm looking at IWM, similar thing. I like IWM to the downside a little better than the other entities for one reason. One, nice bearish engulfing pattern on Monday, further down fall on Tuesday. We came to the, down to just short of the 20-day moving average, just above it, and we're getting a nice little rebound. But where's it rebounding to? It's rebounding back up into the 8-day moving average. And so I would anticipate a potential of being able to take a trade down to the downside on this. Matter of fact, if price action, I will lay a trade on this at the end of the day today, that if price action drops 196.03, go ahead and get me into a trade. I will probably sell a 196 call, and no, actually probably sell a 193 call, and buy the 196, so it'd be a $3 wide call credit spread. In other words, that's a bearish trade that will expire next Friday of next week, the 8th. I like that because we've got a really good potential. And then what I do is on the debit and the credit spreads that I do put on out there, if I'm doing multiple contracts, like 4, 5, 6 contracts, or 4 or 6 contracts, what I'll do is I will plan on exiting the trade when I'm at 40% of my max profit. Because waiting around for time to decay, theta decay, and price action to move in your favor, even on if it's a weekly option, it can be like watching paint dry, because it doesn't, it doesn't melt off until the last 2 days. However, you can fairly quickly, if price actions go in the direction, if your technical analysis shows that price actions going in the direction you expect it to, you can fairly quickly draw the 40 to 50% of the max profit. So I take half of it off, half the profit off, and then I let the rest of it just cook off. If I can get 70% of the max profit on the rest of it, I'm good. Because oftentimes what can happen is you get into that, Wednesday, Thursday, or Friday, or actually Friday, the week that the expiration happens. Anything can happen in those 3 days. If I've taken off part of my profits, I'm just about break even on the rest of my trade. So it makes it a lot easier to, if I'm going to hold on until I get that 70% to 80% of the max profit on the second half of the trade, it makes it a lot easier to hold on and be patient. I buy my patience. Okay, that's what we've got going on for IWM. I like IWM again. Breaks out the low there. That may be a good trade. Maybe a good trade to put on prior to the end of the day. I think it's got some potential. Okay, let's jump over to a couple of stocks that we have been tracking. This is our top 5 power rank stocks. We got into this a couple of weeks ago actually got into it 1221, which is right there. We bought this. We bought ZTS at 161.16. So we actually bought it as it was coming up off of this level here. And now we are starting to break out. We have broken out above this level here. So at least intraday, we need to still get a nice close above it. And so then my upside trajectory, my first profit target on this is 166. I'm doing nothing to change that. I can, if I desire, move my stop loss up to about 15% below 158.30. 158.30. About 15 to 16 cents below that. That way, it brings us closer to a stop, a break-even point. AMD is one we have been waiting at, which I want to point out AMD really quickly, because AMD is a perfect example of what I think is there's two major reasons I think people fail in trading. One is because they trade without stops. Well, 3 major reasons. 2 is they try to trade strategies but without a system. That is a recipe for failure every time. They may be lucky a few times with the strategy, make some big bucks on a couple of trades, but time will catch up with you and eventually rip your face off. Really ugly. The third issue or item that I think causes people to lose money trading is they're either into the trade too early, especially if you're trading options, and theta, time works against you, or 2, they're into the trade too late. In other words, it's already moved. And so one of the things I'll be doing going into the new year, I'm going to provide a really good training session on how to target shoot your entries and estimate what the value of the options will be at particular points. Like if I want to buy an option in the middle of today's candlestick, that's out, that's going to be with a strike date out 2 weeks from now. I want to know, and let's say I want to buy the $91 call. Well, I want to know what the value of that is when the price action gets down to that, but I want to know what it is tomorrow. And so there's some theoretical price estimators on the Thinkorswim platform that I use all the time. and it gets me pretty darn close to the value of the option, what the value of the option will be. And so it's just no, I'm not shooting blind. When I first started trading options, I shot blind. That was 30 plus years ago, and I'd say, oh, this looks good, and I'd buy it. My impulsiveness was really awful, but now I'm very patient. I put in my order. If it gets triggered, great. If it doesn't get triggered, great. So I don't know, maybe with age comes patience. I don't know. So AMD, that's what I'm looking at there. The stock that I'm looking at, BA. Now, Boeing has earnings coming up. It is starting to show some interesting signs in that basically the TSI is towards a place where you can expect some support. We could get a bounce off of that. We do not have a trigger to head back up on the upside. What I'll be looking at for this, earnings on BA is 127 before market opens. So I'd be looking at if I was going to do a debit spread, I would be looking at buying about the 220 by 225 or 230 debit spread. I can get it as long as my price is below this, because my anticipated move is to be going up and through those levels in between now and earnings. And so I would be looking at going 2 weeks out. There's enough time between now and earnings. I could probably do 2 different trades on this. And I might, if the pricing is right, do a couple of contracts of a actual call, just a straight call that expires the week of earnings. So in other words, it would be expiring on January 29th. Why? Because we have things in our favor, the variables in our favor. One, as we get closer to earnings, implied volatility goes up. And if we're correct in the technicals and price action is going up, we're getting, a positive move on the value of that option from two different variables, which is good. So that's what we got for BA. The other one I'm looking at is TSCO. Now, of course, our premium members at Active Trend Trading will get the alerts and the triggers on these. But TSCO, we were in the TSCO a little bit earlier on a trade from what we thought was going to come down, has come down to the 8 or the 140 and then bounce from there. It busted through all that, came down almost to the 34. However, now it's starting to provide us a little bit more of this may be as far as I fall. I've found support. Its earnings come up on 128 BMO. Maybe another good opportunity to just basically run a debit spread or even buy the options moving on up into, I'm looking at somewhere between probably 145 up to 147.50 or even $150. So that would work. So, okay, my friends, that does it for today. Again, you got a stock for us to review, drop that down in the comments or send me a text or send me a DM, and we will review and see if your stock qualifies to be on the radar that we'll be reviewing again tomorrow. Aloha. God bless everybody.